Futures this morning, Salesforce is helping the Dow, obviously, but you would figure since it's tech-oriented, the NASDAQ would be moving as well. And it did a mixed session yesterday. Joining us now, Monica DiCenso, Head of Global Investment Opportunities at JPMorgan Private Bank. You're either, there's two kinds of people, I think, Monica. People that think, wow.
Oh, boy.
Wait a second.
Two kinds of people, yeah.
After what I just heard, I'm wondering where this is going.
It'll be fine. It'll be fine. Two kinds of people. People that worry about how far certain parts of the market have come, and people that say that it's justified by the future of technology or AI.
Yeah.
Is it, in your view, are you one or the other, or a little bit of both?
I think I'm somewhere in the middle, which I know you're not going to like, but I think if you spend all your time worrying about the past, you completely miss. Equity markets look forward, right? And so they're looking to whether the next 1, 2, 3, 5 years of earnings look like. And so if all I'm focused on is that we've rallied 90% in the last few years, then I'm never going to be on the train where it's going. And so I try to focus on where the puck is moving. That's hard. And I think at 20+ times earnings, it is very hard to look at valuations and really get excited to put new money to work here. But it's a mistake if you just say, I'm going to move to cash, especially when rates are declining.
I can't believe Monica used the train analogy.
We have used the train.
We have used it so many times.
Off the train.
But you know what?
The train's off the rails.
No, you got to be on the train. You got to be in it to win it, don't you?
For 2022, stepped to cash and said, I will come back when there's a pullback.
Still not
and
back.
They never were able to get back in because there was never a sustained pullback that felt good. And so what are you going to do?
So for bubbles and bubble talk, the other day we had someone who wrote an op-ed about, maybe we're in a bubble. Should we use the trailing 12 on the PE? Should we, for technology, if you don't use the next 12,
you have to use forward.
If it goes up 80% in earnings, you're either at 55 times earnings or 30 times earnings.
And
it's a big
I agree
difference.
with what you're saying. 100%, you were right to call Jared out on using.
No, I didn't really want to call him out, but
you were right to do it. But my question is, when you're in a bubble and the bubble bursts, the forward turns out to have not been true.
To be wrong. Yeah.
Do you believe the forward?
You know the past,
right.
but you don't. You never know the future completely.
Yeah, I mean, I think analysts are reasonably good at looking out the next couple of quarters, right? They work with companies, they can figure out where things are going. The challenge, and why many have been wrong about AI, is it's really hard to look out 3 years in something like this and figure out what is the impact on margins, what's the impact on growth.
Fast.
We don't know, and it's like if you believe the J curve, which is the argument to be bullish AI now, you have to assume numbers are too low. That is tough to do, and I'm not going to make an argument that the S&P should be at 25 or 27 times. I think that's probably foolish. But to use trailing, I just think is probably very inaccurate because you're not appreciating the upside. And I work at a bank, right? You see all the ways that AI is changing the way we do work day to day, the way we become more efficient, the way we underwrite credit, things like that. Like, it is going to change the way we all live and work over the next 5 to 10 years. And it's really hard, in someone in my seat, to think about what 5 years from now looks like. So it's a bit of guesswork.
But the money that's been pledged for what is really the build out of AI, it doesn't exist right now. I mean, I don't know whether it's going to be printed. Sorkin, you make that point a lot. That money does not exist right now.
Right.
Those trillions. So how much faith can you have that that's going to actually be there? And then the thing I have is, okay, the build out's great. Yeah. All the CapEx expenditures, it's going to be like building infrastructure. It's going to be amazing. Is the payoff commensurate with the trillions that are going into it for productivity or for whatever it's going to do?
We just don't know yet. And everyone's looking at earnings, hoping that companies will say this, but I don't think they know yet, right? It's a little bit of a leap of faith. So when you look at what's being spent, we're watching very closely, what is the free cash flow these companies are generating? Are they levering to do this? Not yet. If that starts to happen, I think you should become very concerned about a bubble. And so that's going to be a big thing to watch. But I've also been speaking with clients who want to get more into AI, and you say, okay, yes, you might want to play the hyperscalers, some of the semi names, but you should be looking at the second and third derivative plays. Where are the sectors that will undoubtedly benefit, but probably have underperformed, have lagged? I think about things like healthcare, that has been a huge laggard, and I don't know how you can't imagine that in biotech, AI is going to change the way you innovate and drugs come to market.
That's true. I will say one of the things that happened yesterday when I read a little bit more about it raised a brow. The sex open AI sex bot thing that we were talking about. The Sam Altman's now like, yeah, you can use all of these sex things.
You're going to have to tie this to yesterday's market somehow?
Well, I am actually, because in August, Sam Altman apparently said on I don't know if it was a podcast, I think it was a podcast, Sam Altman said we're never going to do things like sex bots because that would get in the way. We don't have to do that. We don't have to do those things that would juice the numbers quickly, but we're not going to do those things because they would interfere with our long-term goals for what we have for this. So if a few months later he's now saying, okay, we're going to juice it and get the numbers up, is he worried now about being able to show the revenue at least more quickly than people had thought before?
AI's got to jump on the porn bandwagon to really maximize it. Because we've got to get the porn involved.
Well, because he said that those would be things that would juice the numbers very
at the
quickly.
tail end of the
very quickly get those numbers up,
speak.
and it makes sense.
But when we talk about it, it's why you have to have a diversified approach. I think it's really hard to say who's going to be the winner and which is the one company. I'd be very cautious putting all your eggs in one basket. But again, you diversify. I think it's hard to imagine a world where 10 years from now we don't look back and say, this was as big as the internet was. And so how do you play that? You got to play it in multiple ways. Just be cautious of valuations. Do some in private, do some in public.
Brad told us yesterday that sometimes the very best bets are the ones you already have. So even if they have high valuations, it doesn't matter. You should continue to put money.
He also said 10 times the internet. I would almost settle for 1 times the internet because the internet is so. We had no idea 20 years ago, 25 years ago. I can't even figure out the applications for AI that get us to as powerful as the internet.
You know what? Every analyst I work with, it's what they do all day, like on our desks. And so, it is changing the way we all live and work, even though maybe for some of us, we haven't gotten there yet. But I think, again, 5 years from now, it's going to be a game
And the
changer.
productivity gains are going to be so great that translates into hundreds of billions and trillions of dollars.
One of the big questions on the S&P and valuations was, can margins stay here? And I think this is the argument that maybe they can stay here, maybe they can expand a bit more. And so that would then argue for higher valuations. Again, not 30 times, but maybe modestly higher.
And then there's things in the market other than AI, too, that we didn't even talk about.
There are a lot.
Probably some of those things that out of the S&P 500, there's probably, we just skipped, 480 stocks.
Earnings have been really strong.
Yeah.
Look at the banks. Look at anything that happens.
This is why you do need a barbell approach. Again, so whether it's looking at boring stuff like fixed income again, you need just some balance to some of the exuberance that you're seeing in these sectors, gold, things like that.